Hello dear students, today we will see when goodwill is already existing in the business. It is already existing. If we want, we can extend the goodwill. Existing goodwill, to that if we extend goodwill, how we have to treat, and at the same time return off the entire goodwill. You know that existing goodwill, something is there means okay, that will be showing as it is in the balance sheet. And if you want to give extension to the goodwill, when whatever is extension is given, that is created. So that I will tell you very clearly. Suppose say it's already goodwill is existing in the business in the balance sheet. Balance sheet, suppose say it is 10,000 and it is existing. We wanted to extend this goodwill to 20,000. We want to extend it to 20,000. Already 10,000 is there. Till 20,000 means extra we are creating 10,000. Extra we are creating 10,000. For creating goodwill, just like previous problem, goodwill account attached to old partners account. Old partners, this is the entry. And the goodwill is to, entire goodwill is to be write off. Write off entry also what we have learned in the previous problem, same entry. So here all partners that are to goodwill account. Simple, this one you have to remember. When goodwill is created, for extra 10,000 only we have written this entry, goodwill account attached to old partners account. And for written off, so this will be entire amount is written off. Here is 10,000 extra created, written off. Entire goodwill is 20,000 na? So for written off entire goodwill, all partners retired to goodwill account. So this you have to remember, extra created and written off. Related to this we will see a problem. Problem is given on the desktop. You can just write down. So in this problem, X and Y are partners sharing profits and losses in the ratio of 2:1 respectively. Their balance sheet as on 31st March 2019 was given below. Goodwill is 6,000 and machinery is, see, goodwill is already given. Machinery 50,000, buildings 40,000, debtors 30,000 minus provision means there was already loss of 1,000 created. So total it is 29,000. Bills receivable 15, cash. Now coming to the liability side, X and Y's capital are given 40,000 and 30,000 and creditors 50,000, bills payable. Everything is clear balance sheet. Now coming to the adjustments. On 1st April 2019, they decided to admit Mr. Z into the partnership for 1/4 share in future profits of the following conditions. Z should bring 30,000 towards capital. When Z is bringing capital, what do we say? Cash account attached to Z's capital account. This is we know. And goodwill of the firm is valued at 18,000 and decided to write it off immediately. Goodwill is valued 18,000. Already it is there in the balance sheet 6,000. Now they wanted to increase it to 18,000 means how much is creating? 12,000. 18,000 minus 6,000. It is 12,000 is extra created. When created goodwill account attached to old partners, that is X and Y in the ratio of 2:1 and immediately write off entire goodwill means 18,000. So for write off X account attached, Y account attached, Z account attached to goodwill, 18,000 will be writing off in the ratio of 2:1:1. This is about goodwill. Next, building is to be appreciated 10%, revaluation account credit side, and create a provision of bad debts 8% on debtors. This will see depreciation on machinery 5,000. This is also revaluation account, and a new profit sharing ratio of X, Y and Z would be 2:1:1 respectively in the new firm. This 2:1:1 is useful to write off the goodwill, not anywhere. Remember this point. Now give journal entries and necessary ledger accounts and balance sheet of new firm. First journal entries will write. First thing is that Z brought capital. So first journal entry, cash account, debtor to Z's account, Z's capital account. How much he brought? 30,000. Being capital brought by new partner, being capital brought by Z. Next, goodwill of the firm is to be valued to 18,000. Actually it is 6,000 is given. So we wanted to increase it to 12,000. So when it is just like creation. Goodwill account, debtor to this created goodwill be given to the old partners only, X and Y. X account to Y's account. How much we are creating? This 18,000 minus 6,000 means 12,000 we are creating. 12,000 in the ratio of 2:1. 12,000 into 2:1. 24,000, or otherwise we can do like this. $8,000. 8,000 and 4,000. This is for goodwill is created and divided to the old partners. Being goodwill created and shared by the old partners. You can like this, write like this also. And immediately write off. Write off means X account, debtor Y's account, debtor Z's account, debtor to goodwill account. When they want to write off everything, it comes 18,000. 18,000 they wanted to write off in the ratio of 2:1:1. 18,000 into 2:1:1, 2 divided by 4. It is 9,000. Then 18,000 divided 1 by 4. It is 4,500. 4,500 and 4,500. Being goodwill write off. Being goodwill write off. Next, building is to be appreciated by 10%. Appreciation of building, buildings account, debtor to revaluation account. How much is to be appreciated? 10%. 10% on buildings is 4,000. Being appreciation in building. Next, create a provision for bad debts. So this is revaluation account debit side. So revaluation account, debtor to, what is this? Provision for bad debts. Bad debts. Please be careful this transaction, 8% on debtors. 8% on debtor. Debtors value is here 30,000. 8%. 2,400. 2,400 is exactly loss. But already they have deducted in the balance sheet. Check out the balance sheet. In balance sheet already 1,000 is deducted. Out of 2,400, 1,000 is already deducted. Means we have to create only 1,400 only. 1,000 already deducted. So we need to create only 1,400. So it comes 1,400 only. Are you getting this point? In balance sheet already deducted. If that was 1,000 was not given, then entire 2,000 we would have written into the revaluation account. So this 1,000 already we have deducted. Next one, depreciation and balance sheet also, this you are going to deduct it, total amount. Or you can say 1,000 minus what is this, 2,400. Separately you can deduct it, all together 2,400 you can deduct it. from the balance sheet. Next one is depreciation. Depreciation is revaluation account data to depreciation. Revaluation account data to machinery account depreciation. How much? 5,000 already amount is given. New profit ratio of 2:1:1. This is to write off goodwill, already we have written this. Now next, what else? We have to prepare revaluation account. I'll prepare here only revaluation account. Revaluation is here, buildings, buy buildings 4,000. Next, provision for bad debts, PBD 1,400. Then machinery 5,000. Nothing else to write. So this is loss, we are going to get this 6,400. This 2,400 is loss. So this is to be distributed to the X and Y in the ratio of uh, 2:1. 2:1 means it comes to 2,400 into 2:1 means 2/3. $800, 1,600, and it comes around 2,400 minus 800 it is. So revaluation account is over. Also we'll open the cash account. Opening cash is given here 10,000 to balance brought down. Apart from this, where is the cash is here? 2Z's capital account 30,000. Any other cash transaction? No. So we have cash 40,000. So this we are going to show it in the balance sheet. Over. Next, capital accounts. XYZ capital accounts. You know that format, everywhere you have to write debit, credit. So opening capital is how much is here? Capital is given 40,000 and 30,000. By balance brought down 40 and 30. And Z brought cash of 30,000 by cash. Next, what else? Goodwill. Goodwill is sharing by the partners 8,000 and 4,000. Next, goodwill is written off. Written off all the partners comes. So it is on the debit side. To goodwill, written off 9,000, 4,500 and 4,500. Next, what else is there? So here revaluation account, they got loss of 1,600 and 800. Credit to debit to revaluation account 1,600 and 800. Did we miss anything else? That's all. So we can calculate it. This is 48,000, 34,000 and 30,000. This 48, 34, 30,000. So balance carried down. 48,000 minus 10,600. It is 37,400. And this one 34,000 minus 4,500 minus 800. It is 28,700. And this one 30,000 minus 4,500, it comes to 25,500. Am I right? Let's check it out. Minus 4,500. Yeah, 25,500. Now we can open the balance sheet. Liabilities amount in rupees, assets amount in rupees. First we will start with cash. Cash is how much you got? 40,000. So 40,000 we'll write here. Next we'll write the capitals here. Capital of A, X, Y, Z. No? Okay. X, Y, Z. X is 37,400. Z is 28,700 and 25,500. And rest of the assets will take it from the balance sheet. First one is here 37,400. Yeah, everything we got it. Now first we'll take cash. Cash already we have taken. Now next machinery. Machinery, there is depreciation. Machinery value is here 50,000. 50,000 minus 5,000. It is 45,000. After machinery, buildings, there is an appreciation for building. Buildings value is here 40,000 plus appreciation of 4,000. So it is 44,000. After building, debtors. Debtors value is here 30,000 minus, you know that already created 1,000, 1,000 is there plus 1,400. Together it is 2,400. 1,000 anyway it's deducted. To that we are adding 1,400. So altogether 2,400 we are deducting. So if we deduct it, you will get 600 and 27,600. Okay. So this is over. Next, bills receivable 15,000. Bills receivable 15,000. In exam, please write it full forms. Bills receivable clearly. Don't be lazy. Next, what else is there? Over 1, 2, 3, 4, 5 items. Okay. Next, coming to the liability side, the capital already we have written. Next, what else is there? Bills payable 30,000. Next, creditors 50,000. Anything else? We have written everything. So we'll see the balance sheet. First we'll see 80,000 plus 1,000 plus 25,500 plus 28,700 plus 37,400. It is 1,71,600. And this, if you see 85 plus 44,000 plus 27,600 plus 15,000. It is 1,71,600. That's all, problem got tallied. Searching for this. Okay, now in this problem what you have to remember is goodwill is extended. Goodwill already it is there 6,000. To that they wanted to increase it to 18,000. 6,000 is there. To 6,000 how much we have increased? 12,000. For increasing this 12,000 we have written one entry. Goodwill account attached to old partners as per the given ratio. Then after that entire goodwill wanted to write off. Entire goodwill means 18,000. Write off means opposite to this, including new partner. So XYZ attached to goodwill account. This is creating goodwill, write off goodwill. This you have to remember. Rest of the problem is normal. You know that appreciation of building and PBD also, be careful. Already we have deducted 1,000. To that 1,000, 1,400 we are adding it. So that 1,400 only we are taking, not 1,000. 1,000 is already it is there. Total it is coming to 2,400. Out of 2,400, 1,000 is given in the balance sheet already. Now how much we are creating? 1,400. 1,400 is this. Okay. And next revaluation, this is depreciation. After that we have opened the revaluation account. There we got the loss. Loss is distributed to the partners here. Then cash account we have opened. This is the cash, we got it. Cash we have written in the balance sheet asset, and opened the capital accounts. Capital accounts, you know, opening balances and cash, goodwill, created goodwill and write off goodwill, and revaluation loss. Altogether we got this much of capital. Capital is written here. And bills payable and creditors already given in the problem. Machinery deducted depreciation, buildings also added appreciation, debtors as I told you 2,400 is loss, loss is to be deducted, bills receivable already given in the problem, tallied, that's it, simple. Whenever you are taking this partnership, admission of partners, you have to be careful about few transactions only. Rest of the problem is same, opening the revaluation account and next cash account, partners capital account, balance sheet, writing journal entries, everything is normal. Only few transactions you have to remember, like goodwill, and in this problem provision for bad debts. That treatment you have to remember. Rest of problem is clear. Write down the problem, work out it by yourself, and wherever you are finding difficult, with the colorful marker or with pencil, make a note. So this you have to remember. Rest of the problem is normal. That's like this you have to go ahead. And dear students, already I have prepared lot more subjects. Check out in the description box or in the playlist. You can find it, whatever is there in your syllabus, whether you are doing CS, CA, CMA, BCom, MCom, MBA, whatever it may be. If it is in your syllabus, please follow this and don't forget to share these videos. Okay, stay connected, practice well, have a bright future. Good luck.